Hello, everybody. This is Jerry DeMaio from mortgage-zoom.com and Family First Funding. And the topic for today is the weekly mortgage rate update for 11/25, 2022. Black Friday. I hope everyone had a happy and healthy Thanksgiving. Before we get into the update, as always, I'm going to ask to please subscribe to the channel. And please don't forget to like this video. So, what's happened in the last week? So, you remember 2 weeks ago, we had the CPI report, which showed inflation numbers were coming down, and the mortgages reacted really well to that. And what's happened in the last 2 weeks since then? So, since then, we've held those improvements. We haven't got a lot better when we haven't gotten any worse, but for the last 2 weeks, we held those improvements. So that's good news. I'm going to go today. A lot of people ask me all the time. They say, "Jerry, how do I follow mortgage rates? How do I know which way mortgages are going? How do I know what's going on?" And I always tell them the simplest thing to do is follow the 10-year Treasury yield. That's the 10-year US Treasury yield. And that will show you as the 10-year yield is going up, mortgage rates are going up. As the 10-year yield is going down, rates are coming down. I want to go to the chart to review that together. So this is a chart, a 2022 chart for the 10-year Treasury yield and mortgage rates. And the dark blue is the 10-year Treasury yields. You see the dark blue, and the light blue are mortgage rates. And tell me, I don't know if your eyes are deceiving you. The eyes aren't deceiving me. You'll see basically mortgage rates rise and fall with the yield on the 10-year Treasury. You can see that basically 2022 has been rising, and then we had some movement, but we had a little break from June to August where we saw rates go from 6% down to the high 4%. And then starting in August, we watched mortgage rates just rise, 10-year yield also rising at the same time, rise, and then we basically peaked 2 weeks ago with mortgage rates in the low sevens. And we saw the Treasury yields at about 4.2. I think we peaked at like 4.3%. And then 2 weeks ago, CPI, the much anticipated CPI numbers came out, and we saw a big single day move, one of the biggest single day moves in history, going in the right direction. That brought rates down from the low sevens to the mid to low sixes in one day. And basically, this is the last 2 weeks here that I'm circling. Last 2 weeks, we've held those gains. So, what does this tell you? This tells you if you are, just, a regular home buyer, someone that's not, because there are things like mortgage-backed securities that we watch and other things we watch, but the simplest thing to watch, if you want to see which way mortgage rates are going today, if rates are going up or rates are going down, the simplest thing to do is watch the yield on the 10-year Treasury. One of the reasons you're seeing sideways movement right now in the treasuries and in mortgage rates, because we're really waiting. First of all, This has been a holiday week and not a lot happens. There's not a lot of trading. The trading is really light in a holiday week. And we've been in a holiday week. And really, the markets are waiting for December 13th, the next CPI report. The CPI report talk basically lets us know the direction of the inflation numbers. And if we see that the inflation numbers are coming down, we could see further movement in mortgage rates lower. And if we see that the last report was an outlier and that inflation numbers are not coming down, we can clearly see rates going back up. So we don't really know right now. We're guessing. People are saying, "Oh, the next CPI is going to come in better and rates will go lower." That definitely could happen, but we don't really know, and the markets don't know. That's why they're holding steady right now to wait and find out. And we're going to find out on December 13th, and then the Fed has their meeting on the 14th, so we're going to hear some words from the Fed. So for right now, if you're looking for a 30-year fixed mortgage, you're somewhere, in the mid to low sixes, which is a big improvement from the low sevens. But we have some room to go before we see the fives. That could come on December 13th, but we don't know. So we're being very careful. If you're looking for a house, you should be locking in right now. We're not gambling with interest rates. Rates right now are in the mid to low sixes. So that's good news. That's improvement. And we are optimistic that the inflation numbers we could see another good number, and that would be good news. And we'll see rates come down further. But if you have any questions or want to do a one-on-one appointment or find out about ARM products, find about CRA products, find out about 2-1 buy downs, find out about grant programs that are available, all you need to do is go to www.mortgage-zoom.com and you can schedule your one-on-one appointment with me, Jerry DeMaio. The appointment's going to look a lot like that. I'll have a big smile on, and we'll find out what the best plan is for you and your family. That appointment doesn't cost you anything. It's free. Again, go to www.mortgage-zoom.com. If you haven't subscribed to my channel, please, 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 as always, please subscribe. And if you haven't liked this video, I'm going to ask, please like this video. Thank you again. I hope you had a wonderful Thanksgiving. Thank you again for joining, and I'll see everybody next week. Thank you again. Have a great day.